Hi and welcome to this Blueberry Markets video update with me, 𝖾ģ, Senior Market Analyst. In this video, I'm going to take through the Forex week ahead. We're going to take a look at that all-important data coming up this week, as well as some charts of interest. So let's kick it off with that data then. And what's going to be important for me this week is the US Core CPI data month on month. What we don't want to see here necessarily, or what the Fed don't want to see here, is a rise in those inflation numbers. The reason being is obviously because they're calling for potentially 3 cuts this year. The message from the Fed, or at least Federal Reserve Chairman Powell, has been the fact that they're willing to kind of hold on, keep it all data dependent. But obviously the dot plots were showing that there's potentially 3 cuts this year coming, and what they don't want to see is any kind of rises in inflation. Now, NFP numbers, they came in at 303k on Friday, so that was a big jump, and we actually discussed that if we had a number above 200k, then that could obviously continue to be a little bit of a problem. Above 300 was quite impressive, considering all that we're kind of looking at the moment in the US. And that is not necessarily what the Fed want to see. The Fed want to see, or one thing that they're kind of suggesting, that is if we were to see a fall to around about 180k and below consistently, then that would be enough for them to start cutting interest rates. So we're not seeing that at the moment. So the likelihood of a cut is pushed back again, essentially, until we see this data, this inflation data. If inflation starts to fall, then the Fed don't necessarily have to worry about the jobs data that we're seeing at the moment. In other central bank data news, though, we've got the RBNZ looking to hold interest rates at 5.5%. We've got the Bank of Canada looking to hold rates at 5%. And we've got the ECB looking to hold rates at 4.5%. ECB is going to be very, very interesting, considering the fact that a lot of analysts are expecting the ECB to cut interest rates, and we have seen the inflation rate in the Eurozone coming down towards that sort of 2% mark. I think 2.4% was the last reading we had. So it has fallen within that range of 2 to 3%. So there could be a very dovish tone here from the ECB this week. Going on to the currency strength meter then, the US dollar was the strongest currency. It's in that reversal zone, so we might start to see a little bit of downside moves this week. That's all going to be data dependent as well with the inflation rate. We've got the Swiss franc is at the -7 level, which is a technically huge reversal zone. But last week we talked about the fact that the Swiss National Bank want to see a weaker Swiss franc, so I'm expecting the Swiss franc to remain weaker. Going on to the charts then, so we've got the US dollar index here. I've got the weekly, daily, and the H4 time frame. I'm looking at how price reacts to these levels here, especially this 104.90. We came and retested this level last week. We held below, we rejected. However, we haven't really seen a follow through of selling pressure just yet. You can see here we've almost kind of found support back at those recently formed lows on the daily chart. So I think if we breach those daily lows of 104, it could see the dollar trade more towards the 103 handle. If we don't and we hold here and price starts to go higher, then a retest of 104.90. Break of that could see a move towards 106s. Going on to euro US dollar then, so very similar, obviously the inverse to the US dollar index. We've got that similar sort of head and shoulders pattern being formed and developed here, and we can see that there is a resistance level at 1.0864. Again, depending on how the dollar and the ECB announcements go this week would be dependent on where price heads towards. A breach of 1.0864 could see a move up towards the levels around about 1.0950. A hold below this level could see price come and revisit those swing lows down here towards that 1.0740. Going on to dollar CAD then, very interesting week for dollar CAD. Price has been fairly maintained here at this 1.36 level for some time now. You can see we've actually got quite a build up of resistance here. We're getting higher lows, so if we were to see any kind of dovish tone from the Bank of Canada and a breach of 1.36 could lead for a move up towards those key weekly range highs towards that 1.39 handle. Hold below 1.36 will be promising for those sellers. Market may want to go and target these liquidity points below 1.35 and below. Finally then, New Zealand US dollar. We can see here on the weekly chart that the market has found some support towards the 0.5950 handle. Again, if we do start to see anything from the New Zealand Central Bank, whether we see any kind of hawkishness, willing to hold rates for further, higher for further, then there might be a little bit of a push back to the upside here. Breaches above 0.6050 I think would open the door up for a move higher. If we hold below this level, it could see price move back towards current lows at 0.5950 or even below that. So hopefully you enjoyed that video update. If you did, please subscribe to the channel. I'll see you on some live streams this week, and I'll speak to you soon.